Yo, what's going on, guys? Hope everybody had a good day. Um, Interesting day. Morning was pretty strong open. We gapped up, um, then sold off really hard and had a nice bounce into the end of the day. But the main thing is we've got FOMC tomorrow, so that will be probably one of the most important days in a while, just because it's a brand new year. The market's been consolidating for quite a while now. Let's see, a couple weeks, like two week and a half, 2 weeks, pretty much just been consolidating inside range. We'll talk about that. Yeah, we got FOMC tomorrow. That is at 2 p.m. and we have some more economic data on Thursday. We have initial jobless claims. And then Friday, we have non-farm payrolls, unemployment rate. So definitely volatility is not going to be stopping anytime soon. What's up, Plubber in the chat? Glad to see you. Maybe people will trickle in. Yeah. Gonna be going over crypto, some other markets, major indices, and then we'll take a look at some individual names. What up, 8K? Yeah, sorry it's a little bit late tonight. I was out to dinner with some friends. Got some good food though, so that was cool. And yeah, we'll get started. Hit the like button. You guys know what's up. So let's see. Bitcoin. I was talking about this sort of bear flag. I know there's a lot in the chart, but just bear with me here. This sort of bear flag that like kind of broke down, but it really hasn't played out too well, so I kind of just deleted it for now. Bitcoin's really just been consolidating along with the market, and talked about this yesterday. It's not too normal for Bitcoin to be in such a tight range for a long time. And I kind of noticed this triangle. I noticed it first on Ethereum, actually, which we'll talk about next. Yeah, upper supply line here, got the demand line here. You got two touches on the supply line, but it's kind of curling up. I'll have to see what happens with that. And then it's a little bit clearer. Let's see. Oh wait, let me move this. On the 4 hour here, this kind of range that I was talking about, it's kind of just stuck in between 17K and like 16.4, it seems like. And kind of also drew out a triangle here. Only two touches, but just kind of anticipating that this could continue to form. But mainly what I'm watching is this range in between about 17K and 16.4. Then moving over to Ethereum, like I said, this triangle was what I noticed first here. And it's actually breaking out of it to the upside. Very quietly. I know, like I said, crypto hasn't been doing much recently. And there's a bear flag here too that I was talking about, but that really didn't do too much either. It broke down, just kind of chopped around, but now it's been holding. It made a higher low here, bounced off the demand line, and now it's trying to break out. And I think like 1300 or so is the next major resistance if it can break over some of these highs that it's kind of testing right now. Just from some of these highs back in end of November, early December, and you can see it topped out over here too on December 13th. Then we'll move into other markets. What's up, Clovis? Hope you're doing well. The US 10-year. We were talking about this bull flag for a long time. Played out really nicely and got a nice move, but now it's definitely starting to pull back. Bearish divergence is forming. We were talking about this 4% level that could be the next resistance, but it looks like it found resistance around 3.9, which was support back on October 27th and like towards the end of October. So it's interesting. We know that the 10-year and tech usually move oppositely of each other. So I'm interested to see. I'm not sure. This is on Monday, so I don't really know if you can count this as like a bearish engulfing candle because I don't really think anything really happened here. It just kind of gapped down, but we'll see. It's down 0.4% today, but actually, this is kind of interesting. I just kind of noticed this. It sort of looks like it could maybe, and like this isn't happening yet, but if it can maybe find support around like 3.6, 3.7, lower 3.7s, maybe it could form some of an inverse head and shoulder from, okay, I clicked on the wrong thing. From this over here, if you can start curling up off here, it kind of has that shape to it. So maybe that's something to keep in mind. But with FOMC tomorrow, honestly, a lot of what I talk about tonight won't really mean too much. We'll just have to see how the market reacts to Jay Powell and what he says. Yeah, so moving over to the dollar. Been watching this channel for a while. Actually had a pretty strong day yesterday. Ran right up to the supply line and closed almost right at it. Pulled back a little bit off of it. So we'll see. Yeah, let's see. Yeah, this candle's already open. So we'll see what happens tomorrow. Like I said, FOMC. So a lot of these things could change. But what I really wanted to talk about was the VIX. Because here, let's see on the 4 hour. Yeah, I'm pretty sure I brought this triangle up last night. And this like 22-ish to like 24 range, that's kind of been resistance for a little while now for the VIX. We had a pretty big gap up. It opened up 7%, which was interesting because the market opened up green as well. And a lot of times when the VIX and the market moves together, it kind of means that move could be coming to an end, whichever sort of direction it's going. So like if the VIX is dropping and the market's dropping too, it's usually, or sometimes, I shouldn't say usually, sometimes it could be a sign that that's not necessarily the way that the trend will keep going. But I'm definitely still watching this triangle because it kind of closed these candles right at it. I thought it would maybe push out today just the way that SPY was dropping a lot. And just the whole market in general. But yeah, so I'm definitely keeping an eye on this 24 level. I think that's the big one. AK says FOMC minutes tomorrow's from December. No Powell. Okay. I did not actually look into that. I kind of just assumed that he would be talking. So I might not be correct about that. So I apologize if that is the case. But thank you for bringing that up. And then my thumbnail has J Powell in it, but that's okay. So yeah, let's move over to SPY. Like I said, kind of just been chopping around. It's been pretty volatile recently, just up and down, and it's within quite a big range. If we move over to the 1 hour, it's a bit clearer. Actually, sorry, not there. I wanted to look at the 15-minute. Yeah. So I'm kind of watching this upper zone from like 385 to 388 just because 388 was support before we gapped down and started this whole entire chop area. And in this zone, we've found resistance 3 times, including this morning. And then to the bottom part, we found 378 as support multiple times, and then sort of just the lows of the recent price action around 375. So I think tomorrow could maybe, I don't know, if J Powell's not talking, maybe it won't be as volatile. But you never know. FOMC can always bring the unexpected. So that's kind of what I'm watching. If we do get a lot of volatility and a big movement, this upper red zone and this bluer zone as support, upper red zone as resistance, and if we break out of one of these zones. I think that that could be a direction that the market could head for the next few days or maybe even weeks, just because of how long we've been consolidating for. And you know how they say, the longer the consolidation or base or anything like that, usually the larger the move that follows. This has been quite a long consolidation period, because we go over to the 1 hour. We had quite the big sell-off after we double topped around 410, and this is kind of where we've found support somewhat and just have been trying to hold it. Yeah, I've been kind of keeping an eye on this bear flag, and with all this consolidation, there's been so many gap ups and gap downs, and like honestly, it's either like every day, like every next day or every other day, there's been like a gap up or a gap down. So a lot of the charts that we'll talk about are kind of messy just because of that. But yeah, this kind of looks bear flaggy to me. I just took the high from the gap down here and kind of connected to some of these highs, and then the candle opened from this morning. Even though it wicked up, it still ended up dropping below it. And then we've got 3 touches on this demand line. So we'll have to see about that. Chloe says, does the SPY kind of look like a head and shoulder pattern? What time frame are you looking on? Let me know and then I can take a look. Then yeah, looking at the 30-minute, I was talking about this triangle. With the gap up, we opened above it. I was thinking maybe we could flip this 383-ish zone from some of these highs, like from last week, into some support, and potentially flip the supply line into some demand, and then maybe catch a bounce there. But that didn't happen, and this morning was quite the fake out, especially on some bigger tech names like Apple. I actually didn't take any trades today and wasn't really paying too much attention to the market in the morning. But when I took a look at Apple, and we'll take a look at it in a little bit, Apple really sold off like very hard and definitely pulled down the indices a lot. So yeah, Clovis, let me know what time frame you're talking about, and then I'll go back to it. We'll move over to QQQ. Very interesting. Been talking about this 270 level a lot. 269, 270. That was your lows back in June, and we rallied off really hard. Now we've broken down from this demand line, channel, bear flag sort of looking pattern, and today we opened and then rejected that pretty hard. Bit of increasing volume, but yeah, I think as long as we're under 270 on Qs and tech, I am personally bearish. I think we need to reclaim that level to have more upside. And then let's see, 1 hour. Yeah, and I went over a lot of the 1 hour wedges last night. It sort of played out on some of them this morning. And I deleted it on the SPY chart, but SPY filled the gap around 385.25 this morning. I know I mentioned that there was a few more gaps above, but for right now, it doesn't really seem like it did too much. Q's kind of topped out at the high from Thursday and rejected pretty hard. And I'm still kind of watching this sort of inverse head and shoulders. I'm going to delete this wedge now. Because like this is still possible if we can hold this tomorrow and start curling. But especially just because at least recently on lower time frames, we've been holding this 262 level 3 times now. So all 3 times that we've touched and came down to that level, we've bounced off it and now closed above it for the 3rd time in a row. So I think on lower time frames, that's something to watch. And then we got the 260 support from the lows, and then the 260 259 level was also support back in November, and then as well in the middle of October on the 14th. But what I also mentioned, and what we've been talking about a lot, especially last year, it feels so weird to say last year, but we are in 2023, how a lot of these wedges, when they break out, they kind of just end up rolling over and then turning into somewhat of a bear flag like pattern, similar to how the SPY was. It did sort of get that breakout, but it really got no follow through, and now it's sort of looking like somewhat of a bear flag. So I don't know. We'll have to see. The gap around 273 is still there. But yeah, let me take this off the daily. For now, I think 262 is the level you want to hold, and then 270 is the level you want to break above. And it's pretty crazy how I'm talking about like these $6, $7, $8 ranges on the mega indices. But that's just kind of how the market's been. Like today, just on Qs, for example, we had an $8 range intraday, which was a 3% move from the highs to the lows. And that's just sort of normal now. It's just pretty crazy. When you're on the 30 minutes, it might not have completed. Okay, I'll take a look. What's up, the guy? Late night vibes. Let's go. What's up, Kareem? Good to see you guys. Move over to SPY. If you mean something sort of like this, then yeah, I can see what you mean. And what I also mentioned yesterday was that we this is like the third higher low that we've put in now. So even if you don't look at it as inverse head and shoulders, just having 3 higher lows in a row is definitely bullish. But at the same time, we're making lower highs. And we made a higher high on this morning's candle, but high over here, lower high here. Now this high is even lower than this one. So that's kind of why I like looking at it in this triangle sort of pattern, just because if you're making higher lows after higher lows and making lower highs after lower highs, then it sort of seems to me that it's just consolidating. And a lot of times when you get that, you get these sort of triangle patterns. So I think one way or another will either break up to the upside and break out of one. Like if we can break back over the high that we made today, I think that would be huge for bulls. And then this gap still hasn't been filled from last Wednesday. So if we do break down, maybe we fill the gap and then we make a new lower low, potentially break this one, then bulls would have to hold for like a double bottom around this 374.70, 375 level. So I think, at least for me personally, I think that this sort of triangle is a good way to look at it. And then I wanted to look at the weekly. I didn't take a look at it on SPY or the Qs. But yeah, it's only Tuesday. Currently, bearish engulfing candle. Volume has, oh well, that was last week with the holiday and everything. And today we had Monday off, but I'm expecting some more volume tomorrow. So we'll see. On the Qs, same thing. And we were kind of talking about how these lower wicks, that's good. But you want to see more confirmation and like follow through off of that. So if we just have these lower wicks here and then get a bearish engulfing candle, like it's not really the best sort of follow through, especially for bulls. That's not what you want to see. But yeah, same thing on Qs. It looks like sort of like a pin bar candle. But if we close this week with a bearish engulfing candle, then that pin bar is kind of just doesn't really mean too much, just because bears completely took over the following week. I figured I would just mention that for now. But like I said, we still have tomorrow, Thursday, and Friday. So that all could change. The Russell, I wanted to look at. Let's see. Yeah, the 1 hour. I'll delete the switch too. Like it's sort of got a breakout, but like it really hasn't made that sort of move that you want to see with when you get wedges. But I'm kind of just looking at it as in a range as well. I'll put a level up over here. Yeah, it's just shopping around and like similar to SPY. I think tomorrow, or at least towards the end of the week, like if tomorrow is the start of a move in a more clear direction, and we start heading one way, I think towards the end of the week we could see a breakout of these sort of consolidation periods that we've been seeing. But for now, I think 170, gotta hold that, otherwise we could go lower. And then the highs from today, decently strong level. It actually broke down from it on December 15th. That's when we started chopping around. It was resistance originally back in October. Then we broke over it, flipped into support. So yeah, I'm kind of just watching this 177 level. But not too much has changed with that. Then we can talk about the ARC. There's not too much to really mention for now. Still on this $33 level. It did catch a bounce off like 29.50 area. So I would watch that, see if it breaks to the downside, or if you can continue to hold that and then maybe retest this $33 level that we always talk about. It's the key level from the COVID crash lows back in March of 2020. Then, oh yes, XLE. So we talked about this last night as well, how it kind of has this bull flag pattern, and was rallying up to supply line, but we talked about how the volume was just dropping while price was rising, and that is very often looked at as bearish. And then today it was down 3.5%, and look at that. So we rallied up on low volume, and I'll move over to the 4 hour in a second. It makes it a little bit more clear. But rejecting the supply line with higher volume, basically why I was saying I didn't really trust the breakout here, just because of the volume. And then like if this was a green candle and then the volume bar was green, then that would be a different story. But just because we rejected it and it was down 3.5% today with this crazy high volume, we haven't seen volume like that in about 2 weeks almost. And I was talking about this little triangle here, sort of rising wedge. That definitely broke down today. And you got a 4 hour pin bar to close the day out. We'll have to see. Definitely want to say like $83 around there. A little bit of support below that. But it was resistance back in October a couple times. So if you break below that, there's some gaps to fill below. Around 76.50. And then another one around 73. So we'll see. But yeah, I wanted to mention that because that's why getting volume to line up with the price action is important, just to give you that extra confirmation. Because and a lot of times we always talk about how you want to wait for that sort of back test, like break, hook, and go kind of thing before you enter. But if you were like going long here because you maybe thought that it could break out, but without the volume confirmation, that's why it's important to pay attention to that. So rising volume with the trend that's going up or down is strong, and then if you have lowering volume and you're going up or down, that usually just signals weakness for that sort of trend. And then with that 4 hour triangle that we saw, it broke down, and you got rising volume, just kind of really gave confirmation that, or an indication that you wouldn't really end up breaking out just quite yet. I thought that was pretty interesting. Then we can go talk about Apple. Big bearish engulfing candle today. It was down 3.75% just about. It's now back under that 129 level, which was your lows back in the summer. High volume too. What else do I want to talk about for Apple? But yeah, I think that's definitely not what you wanted to see. When you opened up and gapped up above, it looked like it was good. We'll go down to lower time frames and talk about the sell-off that I was just like very, very surprised to see. I don't know if surprised is the right word. I was just kind of shocked to see how much and how quickly Apple sold off. But yeah, bearish engulfing candle on the daily, still below that 129 level. Not really what you want to see. Yeah, I can go take a look at the 5 minute. Ignore all of these levels here. I haven't really charted Apple on lower time frames, but let's see. So we opened up pretty flat. Let's see. Yeah, basically flat open. But after I started retesting like a 131 level, which has kind of been somewhat of a key level recently. Just look at this drop off. Like Apple dropped $5, almost $6 since from the open. In the first hour, there's 2 green candles, and Apple fell $6 from the highs. And I don't know, I just thought that was pretty interesting. And then this kind of lines up with what I was saying before, like when Apple is, and I talk about this a lot, when Apple is like super strong and trending in one direction, kind of have to sort of play that direction, especially because of how heavily weighted it is. Yeah, I just thought that was interesting to see, because normally Apple doesn't really move that volatile, like isn't that volatile of a stock. Normally get like a couple dollar move, but when I saw it this morning, I was like, whoa, that's like kind of wild. And then looking at the weekly, man, this is crazy. I thought maybe it could get a bounce and sort of retest this red zone that I've kind of been watching, but it's kind of just been selling straight off. Next support level I see is like 122 on the weekly from back in May of 2021. Yeah, I'll have to see. If Apple continues to sell off, it'll be tough for the market, especially the Qs, to hold up and not sell off with it, because as you know, the Apple is well known as the king of the market. Moving to Microsoft, actually saw this on Twitter. I forget who posted it. Let's see, might be a bit clearer. Oh yeah, this kind of works too. Yeah, like I said, with all these gaps, a lot of these charts are really messy. But like you kind of have this demand line here, and I was kind of looking at it as like somewhat of an ascending triangle. I was trying to really find a pattern, but I forget who posted it. It sort of looks somewhat like a bear flag here. Maybe just something like that. It might be a bit clearer on like the 4 hour actually. Yeah. So like excluding this candle here with the close, this demand line's been pretty well respected. So that's something I'll keep an eye on, and I've been talking about this 238 level for a long time, just because to me, if we can't hold on to that and we really confirm a breakdown on that, I think that this gap fill is definitely possible. Let me take this off daily. Yeah, gap fill around 229. Especially if that breaks down, we really confirm a breakdown of like these lows over here. So we'll see what happens with that. Yeah, I wanted to mention that. And then let's see, Nvidia. It's down 2% today. So another 1 hour, yeah. hasn't really. Well, actually, with the gap up this morning, it gapped up and over the supply line that I've kind of been keeping an eye on. That gap around 165 is still there, but at the moment it doesn't look like that will be happening, at least not very soon, depending on how tomorrow goes or in the rest of the week. I think just shorter term, like 149 or so is an important level to watch from these lows last Thursday and Friday, and then where we opened at today. And to the downside, just holding on to the current lows that we have of this area, around 139. We'll see. There's a lot of open space. I know that the lump talks about that a lot. So maybe this wedge, and a lot of these wedges had similar things. Yeah, kind of just move this down here. 139, 148. Those are the two key levels for NVIDIA. Kareem says is volume declining on SPY? Do you mean like on the daily? It is. It definitely is. Overall, yeah. And like the hidden bullish divergence is there, so if we can like continue to hold these levels, and like we've had some green days, but we just never gotten followed through. Like we had a green day, and then we just sold off and gapped down the next day. Had a green day, gapped down the next day. Friday was holiday day, but today we gapped up, tried to break out and push higher, but just sold off, and I don't know. We need to see follow through and stronger price action from either bulls or bears just to get us out of this consolidation. And once that happens, I think things will get a little bit easier just because we'll know somewhat more of a clear direction. But yeah, volume definitely is declining. And personally, I think when price is holding an area and volume is dropping, I look at that as bullish. That's just my opinion. Obviously, a lot of other things go into that. Yeah. Let's see what else I want to talk about. Tesla, man, this was a surprise too. Like I said, I didn't take any trades today. But when I looked at the market and saw that Tesla was down 14% at one point, I was just really surprised. But I guess they had Q4 delivery numbers or something come out, so that was pretty wild. It gapped down and then made new lows on even higher volume. Actually, I want to look something up really quickly. Yeah, so, and like, I actually can't find the name of it. But like, an abandoned baby candle is, when you have a candle, and you have a gap down, then you have a gap up, and that's sort of like a reversal pattern that a lot of people use. I know it might be kind of hard to see. Basically, you have a sell-off day, a gap down, and then the following day you have a gap up, and a lot of people look at that as reversal. And I can't find the name of it, but I'm just gonna call it a bearish abandoned baby, just because we had a sell-off day, bounced up, gapped up, and then even though there's two candles here, we didn't really do anything after the gap up. Like this gap up was an 8% move, and the following day it was up 1%. So maybe could kind of look at it as like that. I'm sorry, I can't remember the name of it. Maybe the guy knows. But yeah, it kind of, and I was talking to this with Champ. Wow, I really can't talk right now. I was talking to Champ about this earlier. With the gap up, never really got followed through, and then with the catalyst today, he broke new lows on higher volume. It's down to 104. It was under 105, which is pretty wild. Yeah, I wanted to bring that up. Look at this volume though on Tesla. It's pretty wild. I haven't seen that kind of volume in since all the way back in March of 2021. There's definitely a lot of people that are looking at it, but I think $91 is the next key support level to the downside, and then 125. But for right now, it still seems just like it's just a falling knife, even though it's still oversold. And we talked about this too. I think Champ brought it up too. Last week's weekly candle was a bullish pin bar, but like now it's currently down 12% after having that. That's definitely not what you want to see, especially if it closes something like this or even lower. Then like this pin bar really means just like nothing, just sort of like a quick dead cat bounce, and the trend that's very strong at the moment is just continuing. Yeah. That's pretty much it. Let me see if I can find if J Powell is talking tomorrow. Yeah, so it looks like it's just the minutes. Kinda, I think AK was saying that before. Yeah, it's the minutes from the December. So maybe it's not, but like I said, with FOMC, you never know. There's always potential for a lot of volatility. So yeah, we'll have to see how that goes. Yeah, we don't really need to do take requests tonight. I know this was kind of a late stream, but thanks for coming in. Hopefully you guys all had a good day trading and just in general. Gotta start the year off strong. I think that's important. And I think I was talking about, I forget what chat I was talking about this in, but if you don't have a rule sheet or some sort of guidelines for yourself to follow, go and write one. Even if it takes you a little while, just get it started. You can always change it and like adjust it, but I feel like that's really important, and it'd be good to have at the beginning of the year so you can try and follow that, because I know that I make a lot of mistakes, and having that sort of rule sheet, because like especially when I make certain mistakes that I know are just like so obvious in hindsight, but in the moment I like can't really seem to realize it or follow those sort of rules that I set out for myself in my head. So that way having it like written down somewhere has been really helpful. I just have it up on a Google Doc. I have it on my computer next to me while I'm in a trade, while I'm looking at the market. So it's just like really enforced. I think that'd be a good idea. What's up, Gold Miner? About to end. Sorry, bud. Yeah. One of you guys hit the like button. Let's get to 10 likes. And check out the links in the description, because I added the podcast Twitter. It's going to be a new episode, the first episode, coming out this weekend. So definitely go follow that Twitter. We'll be posting some more information there. Really excited about that. And yeah, I will see you guys in the Discord tomorrow. Have a good night. And peace.